Supermicro stock continues to soar to new levels thanks to its solutions in the AI market. But are things getting too hyped for this AI server stock? On today's episode, I want to do the following. First, I want to take a closer look at the bullish case for Supermicro. Then I want to take a closer look at some of the bearish points. Yes, there's obviously bearish points for this company. And finally, I want to take a closer look at the current estimates in forms of valuations and forward PE ratio. Welcome. For those not familiar, my name's Jose Najarro, and I spend way too much time reading about semiconductors and AI. But thanks to that, my master's in electrical engineering and my experience working at various innovative companies, I believe I have created the #1 semiconductor podcast for investors. So let's get started with today's episode.
I want to thank the Motley Fool for sponsoring this video, and check out fool.com/Jose for the 10 best stocks to buy now. With that link, you get a promotional offer for the subscription service. Now, let's continue with today's episode.
If we start off by just overall price action, Supermicro is dominating every stock in the world right now. We can see Supermicro right now is up roughly 14.5%. In the past year to date, the stock is up a whopping 132%, and in the past year, the stock is up nearly 700%. This stock is dominating. For those that are not familiar with Supermicro, this is a company that develops AI servers and pretty much servers, but right now they do have a nice of AI server revenue, and they sent these AI servers using Nvidia's GPUs and using some other GPUs from maybe AMD and Intel, and then shipping them out to big players in the data center market, in the cloud service providing market. So obviously they are definitely benefiting, as right now we are in this huge supply constraint market in the AI server, and right now there's too much demand to keep up with supply. So obviously companies like Supermicro are benefiting really well. So first, I want to take a closer look at some of the bullish sentiments for this company. They just reported quarter 2 earnings for the fiscal year of 2024, and look at that. Revenue was up 103% on year-over-year basis, and it was up 73% on a quarter-over-quarter basis. One of the great things about Supermicro is they are one of the first to markets with a lot of their data center solutions. So when a new chip comes out, it sometimes takes a lot of these OEM servers a few quarters before coming out with the full true product. Supermicro says that because they have a lot of engineers in their team, they're able to produce and make these servers a lot faster than their competition. Now, if we take a closer look at quarter 3 revenue guidance that they gave, it was up 118% on the low end of a year-over-year growth. Now, for the full year of 2024, revenue guidance is expected to be 14.3 to 14.7 billion. That represents another triple-digit year-over-year growth. So overall, we can see that Supermicro is doing amazing. And 14.7 billion, the company has a market cap of roughly 37 billion. Its price to sales ratio is less than 2. It's a little higher than 2, roughly like 2.5, if I'm doing my math correctly. And here, if we take a closer look at current revenue estimates from analysts, we can see that they're pretty much in line with what Supermicro gave us. So Supermicro revenue estimates for the current fiscal year, which is expected to end in 2 quarters, is $14.5 billion, which is right in with their overall guidance. Now look at this revenue for Supermicro for the next year. So roughly the next 6 quarters, the revenue is expected to jump up to 18.6 billion. That's another, I want to say, at least 25% year-over-year growth for the company in the upcoming years after a nice triple-digit year-over-year growth. And like I mentioned, right now, one of the biggest growth opportunities and one of the biggest bullish reasons for Supermicro is that they are growing at crazy levels compared to the overall industry. And it's because a lot of their peers either take too long to kind of turn around the chips, or they have other industries as well that make it harder for them to really focus in this AI market. Now, some other bullish sentiments to kind of be familiar with for Supermicro is, for this company, 71% of their most recent quarter revenue came from the United States, not from Asia, not from Europe. Usually you see these kind of big spending coming from international countries. But we can see right now, most of that revenue comes here from the United States. And they did mention that 2 existing cloud server providers and large data center customers represented 26 and 11% of total revenue. So you know that some big customer out there being in that huge cloud server providing market, There's only a few are spending tons and tons of money here on Supermicro. And that alone is another bullish sentiment, right? Because it showcases that, hey, look, you have the opportunity to grow and the big players are willing to spend money on you. I actually just dropped a video on Nvidia earlier today. One of the things that we are seeing is big techs like those big cloud service providers did mention that capital expenditure for the year of 2024 was going to be larger than 2023. So obviously that bodes well for Supermicro, as that means these big players are going to continue to buy more AI servers, and obviously boasting well for this company. They do believe that they are going to try to achieve 25 billion annually in total revenue. So they believe that right now in their most recent quarter, their utilization rate is about 65% across United States, Netherlands, and Taiwan facilities. And they are quickly filling. And some of you might be wondering, oh, Jose, if they're only using 65%, why are they expanding? They still have 35% of the market. One of the things that we have heard from companies in the AI market is right now we are in a GPU supply constraint. So because of these GPU supply constraint, AI servers can't really go to their full capacity in building. But as that supply chain issue continues to get fixed, then we're going to see these utilization rates increase. And it does seem like Supermicro is bullish that they are going to improve, and that's why they're adding new capacity. Because of this, they immediately increased by adding two new production facility warehouses in their Silicon Valley headquarters, which will be operating in a few months. And the new Malaysia facility will focus on expanding their building blocks with lower cost and increased volumes, with other new sites will support their annual revenue capacity above $25 billion. So this is a company that, one, is grabbing market share. As we can see, the company is growing a lot faster than the overall market. They do have a great exposure here in the United States. They do have great customers. They are expanding capacity, and we're going to see trading at very interesting values compared to maybe some of the other companies out there. The other kind of bullish point that's happening here is this is a company that's also focusing on liquid cooling capabilities. And some of you might be wondering, hey, Jose, what's liquid cooling? So right now, most AI servers are cooled down by huge heating solutions and ACs and stuff like that, air cooling. But right now, we are coming into a world where AI chips are becoming stronger, faster, but take up more power and use up more heat. So to kind of combat that, Supermicro is focusing on abilities to cool them via liquid, which will be more efficient, reduce the amount of heat, and reduce the amount of energy a lot of these data center providers use, which will obviously improve total cost of ownerships. They do mention by the June quarter, they will have a nice amount of the direct liquid cooling racks capacity of up to 15,000 per month, and total rack production capacity will be up to 5,000 racks per month by then. So obviously, we do believe that with these upcoming chips that are going to be a lot hotter, you're going to need this direct liquid cooling, and this is something that Supermicro is in the forefront, and definitely a huge bullish opportunity for them. Now, I want to take a closer look at some of the bearish sentiments, but first, I do want to say thank you guys for the support. We hit 32,000 subs so quickly after passing 30,000. So thank you guys for the support. If you haven't, make sure to hit the thumbs up, make sure to hit the subscribe button, and if you want to support the channel a little bit more, check out fool.com/Jose for my special offer there. Now, unfortunately, I want to talk about some of the bearish points for Supermicro, right? And obviously, I might get some hate, but I do believe it's always important to understand both the good and the bad for a company. And like I mentioned, Supermicro designs AI servers, but they don't design the AI chips. So because they don't design the AI chips, they don't really have what I call pricing power, right? They create AI servers, and in theory, other competitors can have an easier time really entering this market, especially in the AI, maybe not so much in the liquid cooling, but there's less moat than designing an AI chip. So we can kind of see that with non-GAAP gross margins. So non-GAAP gross margins about a year ago in quarter two of 2022, non-GAAP gross margins were 18.8%. In the most recent quarter, that dropped down to 15.5. That is a huge drop in non-GAAP gross margins. And then if we take a closer look at non-GAAP operating margins, we also see a bit of a decline from 12.8 to 11.3. The company mentions that the main reason gross margins are declining is because they continue to focus on winning strategic new designs and gaining market share. This is pretty much saying, hey, look, we're trying to grab market share by undercutting our competitors and making sure we win the customer compared to by charging a lower fee. And to me, that's not really pricing power, and some might see that as a weakness. The company does believe that, hey, because of their new Malaysia plant in the future and because of the higher average selling price of things like direct liquid cooling, these margins can go up over time. But right now, in forms of paper, we are kind of seeing the opposite. One of the big competitors, for example, is Foxconn, who does have a huge partnership with Nvidia, and is something that we talked about in the past. Nothing too crazy here, but I just want to showcase that there is competition here with the AI servers, and we see Foxconn building AI factories for Nvidia. So we definitely see this, and one of the main reasons we see those gross margins drop down. The other bearish point, in my opinion, for this company is this is one that needs a lot and a lot of capital to continue to grow, right? You need cash flow to be able to buy more AI chips, and you need to wait to be able to sell those servers at a higher price to then get more cash to buy more chips. So it's kind of this cycle. And that's why we see cash flow used in quarter two was $600 million versus cash flow generated a year ago of $271 million. Obviously, this is for their growth that they need to spend more money to make more money. But in my opinion, if you were in Shark Tank and you saw this, so many companies would say that this is a expensive company or capital extensive company, and some sharks would stay away, right? Obviously, this is not Shark Tank, but just want to share my overall thoughts there. And cash flow was kind of used in operations due to they sometimes build some of these AI servers in quarter two, but they don't get shipped out into quarter three. So you don't really see that cash flow movement. But overall, we can see that this company continues to increase the amount of capital that they need. Most recently, last quarter, they executed an equity offering and raised about $583 million in net proceed after selling 2.3 million shares at $262 per share. I mean, if only they would have waited a quarter more, they would have been able to sell it at almost three times as high, $663. But the company at the moment says they don't really plan on diluting shares anymore. But I don't know. When you start to see stock price sitting at 663, I do believe there is the probability of equity offering being raised again and more dilution happening in their overall shares. But those are the overall negative and bearish sentiments that I do have for the stock. Is more kind of the moat that they have. We see it with their cap gross margins and the amount of cash intensive this company and business is. Now, if you want to look at some bullish sentiments, we can see that Supermicro's PE ratio forward, which ends in 2 quarters, is 30. Nothing too crazy. And forward 1 year, which ends in June of 2025, drops down to 23.04. Again, we continue to hear that the AI market is still in a very supply constrained ish place. We continue to see that AI servers are not just going to data centers. We've heard from Nvidia, and I've talked about it in the previous video, where countries are also investing in AI solutions. So obviously, all that bodes well for Supermicro if they can continue to grab market share, and also if those other bullish opportunities like liquid cooling, which I do believe is a very big market opportunity for them, really take off within the upcoming years and help improve their overall margins. And kind of that building facility in Asia as well can decrease the cost of building some of these racks and can obviously improve gross margins. So for me, while Supermicro is definitely sitting at a very interesting and low PE ratios, this is a company that I normally would stay away from, mainly because Nvidia is already my number one stock. But I do believe Nvidia can benefit from these gains overall. And Nvidia does have a lot more pricing power than a company like Supermicro. So for me, I'm happy with Nvidia, even though Supermicro has done more than almost 3x in the past year or so. But for me, I feel more comfortable in Nvidia. Let me know your thoughts here. What are your thoughts? Did I kind of cover all the bullish and bearish points for Supermicro, or did I miss something? If I missed something, let me know in the comments below. Take care, have a good day, and see you next time.